Hey everybody, this is the Q&A session for Options Moneymaker. Today is February 19th, 2020. I'm Mark Danneberg. I have Aaron Rumley with me tonight, and Michael Kastner is going to be away. Hey Aaron.
Hey Mark.
So I'm going to skip some of the normal intro. Basically, unless you have never been with us before, you know what we do in these Q&As. If you have never been with us before, we very basically offer our time and expertise to answer questions, respond to questions you have about your own personal trading, whether you're learning from one of the options trading programs, whether you're learning how to most effectively use the profit flow analytics charts, whatever it might be. We make ourselves available to help you learn and really reinforce what you need to understand and know about your own personal trading. And before we get to the Q&A, we have Craig with us. Now, Craig, those of you who have been in the Q&As before know that Craig heads up the programming and development for New Cycle Trading and Analytics. And Craig and his team are responsible for having created the Profit Flow Analytics tool. And we're kind of excited about something that Craig and his team, the New Cycle Trading team, have launched as of today. So Craig, are you with us?
I am. Hey, Mark. Hey, everyone. Thanks for having me.
Yeah. Hey, great to have you here. So first of all, before you talk a little bit about your exciting news, I just want to say on behalf of Options Moneymaker, what a fantastic set of tools you and your team have created, the Profit Flow Analytics tools. And then in particularly, most recently, we taught the Cycle Finder Plus in the masterclass, which was just phenomenal. We've gotten tons of really positive feedback from that, Craig. So I know you and I chat, frequently throughout the week, but I just want to say right here formally that you created an amazing set of tools, and there's a lot of traders out there that are doing more trading, more effective trading, and more profitable trading than they've ever done before, thanks to your tools.
Oh, I really appreciate the praise, and we're humbled and honored to have everyone aboard for that. It's like some of the messaging we put out recently. We said truly we feel like we're here trading with everyone else. So the more we hear about everyone else succeeding, the happier we are.
All right. So what have you got?
Well, today has been kind of the big news. We hinted at it, I believe, on the last Q&A session, but we formally launched our Traders Community Forum today. Which has been something in the works for a little while. Essentially, it's a place you can go to right now. You can go to traders.newcycletrading.com. And right there, thanks for bringing it up. And it's just a place for you to connect with us, maybe ask questions, make requests for anything, as well as share your own feedback. I see right at the top, Mark, you've been hard at work sharing the crossover trades we took today. We're also looking for input on additional content. I put a little poll up there where the thought is that we'll eventually be sharing little tidbits about strategies, market analysis, that kind of thing here as well. But it's a place where you can connect to us, gives a way for us to get direct feedback and to kind of create and build a community of traders all working together.
And you've created some groups over here that people can follow, even like, and make one of their own groups also.
Absolutely. So right now, as you see right there, we have a Profit Flow Analytics group, and that's really intended for people to ask questions about our tool set, requests, any new upcoming features, those kinds of things. That's where we'd love to see that. We did create a group specifically for, I'm sorry, I'll let you go through it if you were going to demo that there.
Well, I just wanted to show them. So, Craig and his team have just basic information out there right now, just kind of having launched it today through an email that came out. So if you haven't seen the email yet, check your inbox, maybe even check your spam or junk folder in case it went there. But, there's going to be information out here, right, Craig, about how to use and different ideas.
Yeah, that's correct. Right there, we put some of our existing setup guide just so people would have a reference to that. But as things come out, we intend to post them to the user group there.
Okay.
And then we went ahead and created a group for options and futures as well, so that if people had questions specific to either of those, I know in the live trading room you guys do a lot with that. So we thought it was good to just kind of segment those things out, just so we didn't have everyone kind of dumping their questions into one collective feed.
Mhm.
But in addition to those, we created a group, and that was one we talked about before, which is the 1 million, or sorry, 1 year 1 million project, and that's been kind of my goal this year. I realize we're a little late in starting on that, but in there you have kind of my formal welcome to the whole mission there. We're going to see what we can do in a year right now. My specifics on exactly what that is are in the post there, but you can share that.
Well, and you didn't specify that that was going to necessarily be a calendar year. So
Yeah, it's a rolling year.
Yeah.
We're on a financial calendar. We'll start it quarterly.
there you go. Well, I'm excited about this. As you see, folks, I mean, it's really just getting started. There are going to be posts from the Options Moneymaker team about what's going on with the live trading room activity that we encounter every day. Craig and his team are going to be putting things out here also. And then anybody can start a discussion topic too that they might be interested in, or ask a question. So anyway, I'm pretty excited about that, Craig.
Yeah, we're eager to see what people are interested in and to get feedback from everyone.
Yeah, it's a great place for people to come and continue to share information and seek information. And I think it's a great tool. So Craig and his team did a bit more work, all in the with the idea of helping all of our combined trading communities, both Options Moneymaker and New Cycle Trading. So thanks for that. Hey, Craig, what recent insights? I'm going to put you on the spot here. What recent insights do you have about the market? I know you're one who is frequently browsing the news, and
yeah, I know. I think I sometimes drive you nuts there. We're very big on focusing on the charts, and I am completely a fan of that. But to me, sometimes I'll start with the news and then say, okay, how do I interpret this on the charts? And it's certainly been an interesting year thus far. I think everyone else has watched it as well, just with the everything rally, as I think it's being called, has been really fun to watch. I know earlier this year in the live trading room, you guys were on top of a lot of the trades with Tesla and with others. It's been kind of amazing watching some of these moves. The one today was Space, SPCE, the Virgin Galactic stock. If you've watched that over the last few days, I think they're up, it was like 200%, 300% in the last week or so.
Oh, well, it's kind of in the category of ridiculous, but
yeah, it's up.
Just
So
here it is. Here's
yeah,
the daily.
it's an exponential rise. You can see a lot of people looking at that one. And of course, I won't touch anything unless the charts make sense for it. But it is interesting to take what you're reading and then try to interpret that from the charts. Something I noticed that was kind of fascinating today is they'd mentioned that this past week, 24 million call options were bought on the S&P 500. 24 million.
I wanted you to share that, and I just want that to sink in for a minute. 24 million call options were bought on the S&P 500.
Yeah, and that doesn't mean round to bought to open. And the other interesting half of that was that I have to go get the exact number, but it was something like 12 million or fewer were were sold to close. Mm-hmm. And statistically, there's a correlation. I think there's a Bloomberg article actually about this, where if that number of option contracts bought to open surpasses bought to close by more than 10 million, it very frequently precedes a pullback in the market, which of course, as we know, doesn't mean we're going to get one imminently, but it is interesting food for thought as you look at all of our indicators way high in the range. And it looks like, just today we printed a red AO on SPX. So I don't know, but it is kind of fascinating trying to interpret what you're seeing and reading about along with the charts.
Well, in that article too that you shared with me, when was the last time that we saw anything close to this?
Oh, it's going way back to prior to the Great Recession, prior to 2007.
Yeah, so I think that those types of historical analyses are very interesting. So basically, just to kind of repeat this, 24 million call options bought, 12 million call options sold to close. and there's a correlation to if that difference is greater than 10 million, that the following some period of time, it's not specific as I understand, Craig, but correct me if I'm wrong, but the following some number of months generally has seen something around a 4, 5, or 6% decline
Yeah,
in the
I
market.
think they said it was usually within 2 months you can kind of expect a 4 to 6% pullback, which is somewhat in line with there have been other analyses they've done this year saying that they don't necessarily expect so much of a crash as just a series of 5% pullbacks as events happen, which thus far has been pretty well in line with what we've seen.
Yeah. Yeah. And what I love, seriously, is the pullbacks that we're seeing are actually nicely aligned to the metrics. Cycle Finder Plus, the A and B entries on the daily chart, alignment with the AO. So, the last major move down we saw in the S&P 500, the crossover on the daily Cycle Finder Plus presented itself on the 22nd of January. S&P opened at 3330 that day, and on the cross back up, if you waited for the cross back up to exit out, you're at 3256. So that's a pretty nice, healthy move down, and that lasted from the 22nd of January to the 30th of January. So that's what about
Absolutely.
80 points or so down in the S&P 500. If you're an options trader, when you refer to the profit sweet spot matrix that we rolled out as part of the masterclass, then you can easily identify what your percentage win rate is, your desired percentage win rate. Do you want an 80% win rate on these daily crosses? Do you want a 50% win rate? Are you interested in a higher or lower risk profile? But you can set your profit target based on a sweet spot. Now, I want to just interject this. We haven't really talked a lot about this as a strategy. Aaron has brought it up in a lot of discussions that we've had about the continuation and continued development of the profit sweet spot matrix. But look at the entry here on the 22nd of January. That's when you had the cross. Now, maybe it hit your sweet spot that day. I'm not really looking at the sweet spot right now. Maybe not, but 2 days later, 3 days later, you have this gap down. Now, what's cool about these signals is if it doesn't hit your sweet spot and the signal is still telling you to hold the trade, don't take any other action. There are periodic episodes where you're going to wake up the next day and have a gap. You had a gap down here. You're into a trade here, you have a gap up the next day. If I switched to Amazon, that's one of the best examples we've had of a gap. We were in a trade long here. 2 days later, earnings, we have a huge gap up. So the profit sweet spot matrix allows you to set your profit target based on historical information, but it's very conservative because the sweet spot matrix going back in history assumes that these gaps scored a profit that was equal to the sweet spot target. It doesn't take into account these gaps that are really strong and favorable for you. And recently, we've been seeing quite a few of these. I mean, Tesla has had Tesla was so much fun.
Tesla's entered the stratosphere.
Yes, it has right there. Isn't that one of Musk's rockets taking off right there? Kind of looks like it. So anyway.
You can't trade shares in SpaceX just yet.
So Craig, thank you so much for the forum. Please stay with us if you have the time and jump in on anything you want to share that we might be talking
Absolutely.
about. But I thought that we might use that as a segue to what Erin's been tracking for the last several days about the daily crossovers and the trades that she's been calling out in the Options Moneymaker live trading room on these daily crosses.
Past couple days have definitely been fun in the live trading room with the daily crossovers. You can just stay on Tesla. We just had one. Today's what, the 19th? Yeah, we had one yesterday. Was the long entry, and we were able to, I mean, you can see it went up, what was that, about 19
19 points,
points.
just under
Um,
19 points on yesterday's movement.
Right. So that's more than the sweet spots. We were able to open and close that trade for a profit all in the same day.
So when Aaron's saying it's more than the sweet spot, we typically, as a standard, are using an 80% win rate. So if somebody was using a lower win rate and was looking for a bit more profit, and if they were holding it overnight to one night, this is what I was talking about. This is the gap to the upside. Now, of course, you have more risk holding overnight. There could be a gap to the downside, but this is an example of one where just simply coming off of that signal, Aaron shows the stock opened at 841.60 yesterday, and today it opened at 923.50 and actually went up to 944. So that stock's up 100 points from yesterday's open to today's high.
Just
You
a
won't
little bit of profit.
you won't capture all of that, but yeah, I mean it just shows the combination of the crossovers with a profit sweet spot matrix. You're going to lock in a really great profit based on historical patterns, but if your good till canceled order on the option doesn't trigger that day, you have an opportunity on some of these stocks to experience a much bigger profit just simply based on the gap. That's great, Aaron. Tesla. What else did you do?
What did we? There was an SPX put yesterday.
Okay,
Let's
SPX
take a
put.
Now SPX has been a little bit back and forth up in that range, but we just took the signal. Yeah, it was the SPX put. Went short on it.
Moved 14 points from the open.
And our sweet spot was 11 points, so
11 points.
moved just enough.
Yep.
Was able to close that for a profit. Very easy to get in and out of as well.
When Aaron's talking about the, it's been a little bit back and forth here. Here we had a cross down, made money on that. Here we have a cross up, opportunity to make money on that. That actually moved just over 11 points. Then cross back down. And so all Aaron's doing is following the signals, not second guessing, not over interpreting, not doubting because, this is high in the range. And we're using a very realistic, conservative 80% win rate, which on SPX says if the underlying stock moves 11 points, we're going to be able to be out of the trade. What else did you have, Aaron? Did you have an Amazon one?
That was today.
Cross to the upside today.
Yes. Cross to the upside.
Moved up
That
18,
one,
a little less than 18 points.
right, that one we got into a little bit after it had already moved. So once it hit the sweet spot based on the open of the bar, we evaluated the position and had a nice profit on the trade. It wasn't quite the GTC that we had set, but took the profit and closed out of the position.
See, that I just want to emphasize this, folks. That's really good management that Aaron applied there. So we got into the trade a little bit after the open, and the price had already moved. But we know based on the profit sweet spot matrix that the anticipated movement, what's Amazon's 80%?
15.
15 points. So it had already moved a bit, and we were looking for 15 points off the open. She had a profit on the position, but we'd already used a portion of the movement before we got into the position. So since she had a profit and it had hit that 15-point movement, decided to go ahead and take the trade off. I think that's really, really smart management.
And we actually did that same exact management with NDX in the Q's position. So NDX is a fairly expensive option to trade. And so for the live trading room, we talked about taking an NDX trade or taking a Q's trade. And then
pattern looks exactly the same.
Once the once NDX hit the sweet spot, again, adjusted the order to take the trades off for profit.
Nice.
And then we also did Shopify, which that one failed while I was looking at other positions, which was really awesome. So the Shopify opened up a call today, and it has a smaller sweet spot, but it was still nice quick profit on that. It's fun when you're off looking at other positions, and next thing you know, the position's gone from your position screen because it closed out for a profit. The GTC hit.
Yeah, so it has a smaller sweet spot, but it's a $540 stock as opposed to when we're looking at Amazon or Tesla, it's a $900 stock, or Amazon is a $2,000 stock, $2,100 stock. So you got bigger sweet spots because typically the underlying is going to move a bit more.
But you're also usually able to get a higher option delta for a similar price that you would find a lower delta on those larger stocks.
And if you're using the personal trading plan to help plan your capital commitment, if you have a certain amount of capital commitment you're willing to put into each trade, you might have a smaller sweet spot on a stock like Shopify, and you might have a smaller per share profit, but you might be trading more contracts. So if your commitment is $5,000 per position, well, you might have more contracts on a Shopify than you would on a Tesla or NDX. So, there's that aspect of it, that using the tools that you have available to you still helps you plan and take a really nice profit.
Absolutely. Absolutely.
I will add for fun that it has been a lot more easy to take those now with the proliferation of zero fee brokerage transactions.
Yeah,
200 contracts used to hurt.
That's a big deal now.
Well, and that's why, similar with NDX and the Qs, the NDX position we are looking at just based on important factors such as open interest and everything, the option price was around $60. But looking at the Qs, you're able to get an at the money for $3.66. So you have more leverage with the additional amount of contracts that you can open when you're only paying $3.66 per contract.
Mm-hmm.
So Arizona is asking how I calculated the Q's exit. Because I don't have a specific sweet spot for the Qs, I used NDX. And I paid attention to when NDX hit the sweet spot and then evaluated the Q's position.
Also, Mark, if you want to do a translation from NDX to the Qs are generally about 0.024% of the value of NDX. So you can use that to help extrapolate what a reasonable profit target might be in the Qs. But like Aaron said, if you decide to trade the Qs, you can still track NDX, and when NDX hits the sweet spot, you can go ahead and close your Qs position. Hope that makes sense to you, Mark. Did you have any others, Aaron?
I don't think so. I did think it was interesting that NDX had a cross to the upside, but SPX did not. I just thought it was interesting. Usually those can go pretty close in tandem with each other.
Yeah, look at how tight NDX has been tangled up here, though. I mean, 95.7 versus 95.6. And NDX closed today, crossed down. Right? Yeah, NDX closed, crossed down today. So we may actually have that was a call you did today, right?
Yeah, I had to double check to make sure I was looking at the right. Yeah, absolutely. It was a call.
Yeah, so I mean, if it opens to tomorrow where it closed today, then you would actually be opening a put on NDX. So I guarantee we'll get out of this period eventually that has this almost every other day or every day cross back and forth, and we're going to get into some nice moving cycles. It just is a period of time where, the market is trending higher. The algorithms and metrics that we use in the indicators are interpreting we may be weakening here. So if you just follow the type of method that Aaron is using off of the daily, you just get in when the signal tells you to go long or short, and you get out either for a profit or you get out when it tells you to take the trade off. If you'd not had a profit on this long today and we'd held overnight and it opened short tomorrow, open cross down tomorrow, you'd be taking the trade off, whether it was a profit or a loss. Mark, clarification, not 0.24%, it's 0.024. It's actually 2.4% roughly that the Qs are of the NDX. 2.4%.
And I was looking at that earlier, and it was based on the NDX sweet spot. It was about a 1-point sweet spot on the Qs, and which would have been about a 50-cent profit based on the 50 delta that we held. But I recommended setting an order to close for $1, just because we were monitoring the trade and could look at where the price was once NDX hit that its sweet spot target.
All right, so help me with this, Craig and Aaron. Let's just quickly run through our watch list, and we'll see what might be setting up for tomorrow. NDX. In fact, I'm going to switch to a 10:30 daily. Daily looks like it might be crossed down at the open. Could possibly be on NDX. 30 minutes crossed down. 10-minute cross up. So a little bit of a conflict there, but we would wait only on the daily. In fact, I'm just going to run through the dailies here.
The daily is 0.1 apart from each other.
I know.
So I would barely call that a cross.
It could go either way, right?
Absolutely. It depends on what implied open is going to be.
All right. SPX, what do you see here?
Well, that's still crossed down, but that crossed down yesterday.
I gotta be full disclosure. I'm short SPX right now.
So are you weighing in on what you want?
No, I took it. My honest analysis was I took it based off of a 10-minute crossover towards the end of the day. Not necessarily sure whether I was going to hold it. I liked having a little bit of extra breathing room, and I got that. And the daily was currently crossed over, so if it gaps, that'll be very good. But I have a little bit of breathing room on the position. 30-minute was headed down. They all agreed.
That was a nice setup just before 3 o'clock today. That's nice. And just for point of reference here, Aaron makes a really good point that it's questionable on which way NDX could go. Right now, NASDAQ futures are up. The applied open is up about 30 points. It's a rocket ship that won't quit. What do you think about booking, Aaron?
My booking's pretty strongly crossed down. I think it would take a lot to see that sort of reversal, especially since we didn't really make progress the last 2 days. Cross happened yesterday. We're actually holding a booking put right now.
We also satisfied that oops pattern yesterday. I don't see anything else to the downside. We do have earnings on the horizon on the 26th. Okay, we'll put Amazon.
Yeah, and that crossed up today. We already are in and out of our position based on post-market. It looks like it's going to continue to be crossed up. course, a lot can happen overnight, but as of right now, it is pointed up higher.
And you wouldn't take another trade if you had a second day where it continued crossing up. You've already taken this cycle, correct? Yeah.
Yep.
Okay.
Plus, there's plenty on our watch list.
Yes.
I was a little concerned this morning. We were looking at all the possibilities of what could cross, and there was about 5 possibilities. Luckily, we only ended up with, what was it, 3 or 4, 3 crosses or so, but you know, I'm okay with passing in other ones to look at other stocks instead.
You know, every once in a while I get distracted by headlines. Now, I am notorious for not really paying attention to news, but, you know, TradingView has these headlines out here, and I'm just distracted by this headlines for Amazon. And then they start talking about Tesla and gold. So Tesla, gold, and the dollar soar. I think you just referred to this, Craig, as the everything rally, right?
Yeah, that's the term I hear getting thrown around.
And it has some stock market investors fearing how it all ends. What happens when everything rises all at once? Yeah, well, we're about to find out. I will tell you the way we here at Options Moneymaker are going to handle it, and that is we are simply going to follow the signals that are presented to us by the profit flow analytics. And for the daily signals, primarily the Cycle Finder Plus, which is what Aaron just talked about. So let's see here. Google is one of our other watch list companies.
Yeah, that one's pretty tight. So we'll see. What do your numbers say? 89, 33, 91. Just because of how it started to flatten out a little bit there. I'm expecting a cross to the downside. We've already been in and out of a Google call, taking advantage of the long entry, but we'll see if we have any sort of movement to the downside. Could have a cross and opportunity to open a put.
Yeah, we did have a red AO come on today, which is a whole nother bias indicator that we could potentially see. I'm just curious here. Did we have a bearish divergent bar today? Let's see. High 1532, low 1521. Yeah, had a bearish divergence today. So just small little indications what could be coming. So we'll be looking at Google in the morning, and then Tesla. Tesla's
That's
on
one
its
I
way
wish
to
we
Mars.
held overnight. I mean, we
Tesla's
were
a
in
bit,
and out of that trade yesterday, but
Yeah.
Tesla is a bit of an interesting case just because of the sheer amount of short interest on the stock. There's a lot to be said. It is currently, I think, still the most shorted stock in the entire market right now. And the problem that was running into was that people were having to cover their short positions as it rose, which fueled an extra exponential rise. So it's really tough to gauge what of the remaining upside is driven by actual buying activity, or is it the cascading result of what's already happened?
Yeah, I'm glad you brought that up, Craig, because I know that was taking place back here when we got up into the stratosphere. And the shorts that were forced to cover fueled a tremendous amount of buying on the stock, buying activity. So that's not a sustainable level of buying.
Right.
So we'll have to see. We'll have to see here what happens now. The last 2 days have formed an oops pattern. Oops, for those of you who may not understand it, is basically a gap in the closing price of the stock to the open price of the stock, and you evaluate the high of the prior day compared to the low of the next day. So if there's a gap between those two numbers, our research and history shows us that 93% of the time it's going to move back lower to satisfy that gap. And what I see here is we've got an oops pattern at 841.60. All right, so that's down from we're trading at 917.42. So we need to get down to 841. Second oops, we need to get down to 812. Let's round off to 813. And interestingly enough, there is one all the way back here, down to 589. So, that'd be an interesting series of movements. So we'll keep an eye on the charts, and certainly we'll let you know in the live trading room. I'm sure Craig's going to be posting little tidbits now and then on some of these stocks too in the forum.
If you could just tell me which stock like Tesla is next going to perform that action, I'd really appreciate it.
Yeah, I would have liked to know that yesterday. I would have held my position for the 100-point move today.
Okay. You guys need to get on the email distribution list, because I actually put that out yesterday to a limited number of people. You didn't get that?
No. He left us out, Craig.
I don't know. The tools work. I have a hard time predicting stocks that are going to move 80% in a day and a half.
Well, when you figure that out, Craig, let's add it as an indicator.
Well, and just look at that price action prior to last earnings. Just a steady stream of little up, little down, and then yeah.
Okay, was there anything I missed, Erin? Can we look at Shopify?
I don't think so. That crossed up today, and that's the one we took profit on.
Yeah. You know, there's all sorts of underlying information on these stocks, you know, like Tesla, what Craig's talking about, the push to the upside because so many shorts are buying to cover, and it's the most shorted stock in the market. At least I know it was last week, and I think it still is. Booking, you know, big travel industry. Is the coronavirus impacting travel industry? I know recently it's been affecting some cruise ships. Is it affecting flights? Are people choosing not to fly? I don't know the answer to that, but you got earnings coming up on Booking. You got to cross down to the downside. I don't know, but we're going to wait and see. I can't possibly properly anticipate what news is going to do to a stock. What I can do is feel very, very confident in what these signals are going to do to a stock. And what I find so interesting, and it's just fascinating to me, the number of times that the daily crossovers just simply on the Cycle Finder Plus correlate so closely to the top or bottom of a cycle. This cycle right here on Booking on January 14th was triggered when the stock opened at 2074.60. We missed the high of this declining cycle by 2 days, and it went from 2074.60 down to a low of 1820.44. So it's 250 points. So these are not unusual moves. That I'm not saying that they happen every day or every week, but they're not unusual moves on the portfolio of stocks and indexes that we track. We're tracking Amazon, Booking, Google, Shopify, Tesla, SPX, and NDX cash indexes. And there may be more that we want to track, but as Erin mentioned, if there are 4 or 5 of them that are triggering in the morning, it's too many for us to manage ourselves. And like any investor, any trader, we're going to cherry pick the ones that we feel are the best opportunities.
And we've missed opportunities before because there have been a lot. So we take them as they come, which I appreciate TradingView's alerts that you're able to program for the indicators because they have an alert log. So you'll have all those pop-ups in the morning, but you can clear them all out and just look at the alert log and see, okay, what crosses do we have? And then just systematically go through and open a position. And then I think there was one day, and I can't remember what stock it was. I'm going to guess Amazon, but there was one day where we got to one and it already moved to the sweet spot. And so we ended up skipping that trade and just focused on the other ones that we had opened.
I have one other fun tidbit as we're looking at the earnings data on that too, and this is just a fundamental news thing. I think it was reported today the current Shiller PE ratio, the price to earnings ratio, which is just the measure of what companies are earning versus the actual market cap of them, crossed 19 today. The average is 14 to 15. So for perspective, we are not historically overvalued, but very expensive. So as you look to earnings, it's worth considering that.
Good point, Craig.
Still doesn't mean the algorithm doesn't work on the cycle finder, though. It's amazing how that has coincided just perfectly.
All right, let's focus on some questions here. Jack is saying that the type pattern that you were referring to, Aaron, on NDX in particular, it was his question. Are we looking at just the red and blue numbers to see if the cross has happened? Same pattern's been around on Google and Booking, or you're looking for a clear cross. Some mornings it wobbles up and down. Yes, it can wobble, but the rule that we're following and the basis for the profit sweet spot matrix was that it crossed at the beginning of the market. So we have situations where a position, a signal will present itself as a cross, and we might get into a position, and then that daily signal uncrosses. That happens. There are a couple of different things you can do about that. One is you do nothing, but you wait for the next day to see what the signal is. I mean, that was the whole premise of trading the daily crossovers, is one amount of effort each morning, pay attention to signals, open your trade, put on a good till canceled order based on the profit sweet spot matrix targeted exit, set a good till canceled order, and be done, and come back the next day and look at it. If you're more involved and more active trader, one of the things that Aaron and I have had some discussions about is if there's clearly a uncross or perhaps almost an immediate reversal, we have discussed possibly converting the position to a straddle or a strangle, meaning if we had a cross to the downside and we opened a put, and a few minutes later, half hour later, whatever it might be, that signal uncrosses, that signal reverses itself. Rather than immediately close the put, we don't want to start taking rapid fire action on those intraday crosses, but we might also add to the position a call and hold both sides and then sort it out over the next couple of days. We're generally going out 2 to 3 weeks to expiration, so it's not like we're running right up against the wall here on these. So that's a strategy that we've been having some discussion about, and if we decide to implement that on any of these positions, Aaron certainly will be letting you know.
Also, I mean, when you go back and look at NDX today, you would have never thought that we took a call and took a profit on it. Because when you look at it right now, the way that it closed with the Cycle Finder Plus cross down.
Massively crossed down. Yeah.
But my point is you just take the actions and it might reverse as this did during the day, but we're already out of the trade and it might flip back and forth right at market open, but then take off in the direction of your position.
David's asking, what about the existing Amazon put? Any thoughts? So the existing Amazon put is February 28th expiration. And we will, if we decide that we need to, we may take action on that. Now, we had a cross up this morning, took action, took some profit. We may go ahead and roll that out. If we decide to, that's a very common option management technique, but we might want to wait until it crosses back down. Or we could take action just simply because we have other indicators on the profit flow analytics. We have the traditional cycle finder. We have a B entry based on that traditional cycle finder red. We have 2 days of red AOs. We may just roll it out because of those, and we are in the upper part of the range. Time is an important factor in options. So if the trade has not worked out and we're behind on the trade and we believe that the stock can move enough to overcome that current drawdown, rolling it out would be the best and most economical way for us to manage that. So we'll take a look at that over the next couple of days because we're getting down to a week to expiration. Jack is saying, happy to hear the analysis of booking since I entered a put yesterday also. And which one are you in, Aaron?
March monthly 1800 put.
March monthly 1800. So when booking's at 1600 in the next couple of days, that should be profitable, right?
Absolutely. You mean tomorrow when it gaps down?
I'm just joking about that, folks.
Got
Don't
to
take.
put it out there for it to happen.
Well, let's see here. There aren't. Well, there is one oops pattern, I think, back down to 1960. That's only. That's not a lot. It's only 8 points. It's not a big deal. So we'll see what happens. But I don't usually pay attention to earnings, meaning the actual earnings call on the stocks that I'm trading, because I always see the result of it after the fact. But I am kind of curious on booking whether or not the this coronavirus is having some sort of a strong negative impact on their prospective earnings and their current results. Stephen is asking, do you manage your overnight SPX trades with futures positions through the night? Absolutely not. We don't trade throughout the night. We keep trying to get Erin to agree to work a third shift, but she hasn't signed up for that yet. But no, we're not doing any overnight trades right now, Stephen. Meaning trading futures. We are sometimes holding options trades overnight, but there's no action on those throughout the night.
I mean, technically, we do trade futures a little bit before market open, but I wouldn't consider that overnight.
Yeah. I mean, generally, the first trade we're going to take on a futures trade in the live trading room is probably going to be 8:50-ish. So we've got about 40 minutes before the regular market open that we really start to pay attention to it. Ken's asking if we're still trading NQ, that's the NASDAQ 100 futures, in the live trading room. Yes, we are, Ken. How many trades were there done today? I can't tell you. Michael was running the room today. Aaron was away working on some other things, and I was also away, so I don't know how many trades there were. But Michael has been prioritizing the 10-minute crossover entries with a 3-minute alignment. In other methods, you can prioritize the 3-minute entry with 10-minute alignment. We would still work the same 2 time periods, but you can choose to take a 10-minute or a 3-minute alignment. So I can't answer the question exactly how many trades he took on NQ today. Arizona just shared, I did hear that, Mark, that Trump is considering tax incentives for stock investors too. So that's good. We need to get this market moving. It's a little sluggish right now to the upside. Just joking about that, folks.
Bruce is asking, the live trading room is opening sooner, and you've incorporated options in the PSSM to the live trading room. Do you plan on continuing this feature?
Absolutely. Yes. Yes, we want the live trading room to be a balance between futures and options activity. So Aaron is primarily at the beginning of the day, beginning of the regular market session, primarily focused on options trading activity. And then throughout the day, Michael and Aaron together are focused on futures trading. We're doing some more research. Aaron and I are doing quite an extensive amount of research and doing some expansion of the profit sweet spot matrix so that we can have a better idea of when the most opportune times are to be trading futures and incorporate that into the live trading room. So you'll have knowledge of that if you're following along with us in the live trading room. You'll also have that made available to you with future updates of the profit sweet spot matrix.
Jack's asking, I have my chart set up like you with multiple tabs open. The problem I have is I haven't figured out how to get the different charts saved so that I can easily open them each day. So you just want to make sure that each chart is saved a different name. So on Mark's chart, you can see the little cloud symbol with the check mark in it. And on there is where you can save. If you click the drop down menu, you can rename each chart, you can make a copy of it, you can load other charts. And so if you're starting with a fresh web browser each morning, you would just go to load chart layout. You can actually click the star next to each chart that's your favorite, and then just click on each one to load it, and it should open in a new tab. That's what I do every day. I'm pretty sure that you could also save them as bookmarks, since each chart is a different website in itself. So that would be an option as well. Go ahead.
Yeah, you can choose any of these to load. You just have to have a different name for them, Jack.
So as long as they're all named differently, as long as you're not having the same chart open up in different web browsers, as long as they're different saved charts, then that should work really well to then go ahead and load all of them. But you could also, I'm pretty sure, bookmark each tab as well into your web browser, and that might work to open it. But personally, what I do is just load the charts I need each morning. And you do want to load them each morning. You want to refresh them to have a clean chart. Otherwise, you'll start to see some items not work if you've just kept them up all night.
TradingView tries to cache a lot of the data that goes into charts, so it's recommended to refresh every once in a while like that. I've never tried leaving it open for multiple days, but it does get a little weird if you leave it open for a very long time.
I guess I should refresh mine every day. I leave it open all week.
I think
It
yours
does-
naturally refreshes when you're switching through tabs, I think.
That's
Yeah.
possible too.
Yeah, so it does work, but I make a point of refreshing every morning. So Steven's asking, what options are you buying on the up and down crosses? At the money, weekly for anticipation of a day, or short-term trade? So we talked quite a bit about that in the masterclass, Steven. The Profit Sweet Spot Matrix gives you some guidelines. So first of all, we know what the anticipated movement of the underlying stock is. In this case, I'm looking at Amazon. It's telling us that if we were looking for an 85% desired win rate, and this is a number that you can set on the PSSM, that historically, based on history, the stock is going to move 85% of the time, 12 points or more. So you can use that as a starting point to set an exit target. And then we show 3 different levels. You can trade whatever level of delta you want. We show a 50 delta, we show a 40 delta, we show a 30 delta, and it will help you determine what the profit target should be based on each of those deltas. Now, if you decide to go further out of the money and you open a 20 delta, you're going to be taking that anticipated movement of 12 points times a delta of 20, and you're going to set a profit target of $2.40. So it's very flexible using the Profit Sweet Spot Matrix, and we're using it generally based on a certain amount of capital commitment. So if I'm using capital commitment as my primary guide, then a $5,000, and I'm just using that as an example, a $5,000 capital commitment on one stock may mean that I can trade a 50 delta. On another stock, it may mean I'm out to a 20 or 15 delta. But the opportunity is still the same in terms of using the Profit Sweet Spot Matrix, setting my desired win rate. I'm going to set it to 80. Means I got a 15-point sweet spot on Amazon. And so it's that Profit Sweet Spot Matrix provides this whole correlation between, as an individual trader, what's my desired win ratio what does that translate into based on history as a anticipated underlying movement, and then what delta am I going to choose to trade? You're not limited to the deltas that we've listed. We're just listing them there as an example, but you should use the specific delta. You know, we might show 50, 40, and 30, but you're opening a 45 delta, or you're opening a 32 delta. So if you're in the live trading room in the morning, when Erin identifies a trade, first priority is getting the trade open. And then she evaluates the profit sweet spot matrix, looks for the underlying movement, anticipated movement, looks at the delta of the specific option that she opened, and does that calculation to then set a profit target for exit. The other thing that we use the PSSM for is we know what the longest cycle time was in the history that's built into the PSSM. So on Amazon, since January of 2019, the longest cycle time was 15 days. The average cycle time is 6 days. So you can use that to influence what expiration that you want to use. You know, you don't want to tighten up your options trade too much. Generally, traders who start using very, very short-term options, they'll run into more problems than traders who are giving themselves time. Time is your friend when you're trading an option. I like to use a rule of thumb that says I want to go at least 1 week beyond the average cycle time. So somewhere around there. If the average cycle time is 6 days, and that is calendar days, then I'm going to generally go about a week beyond that for my expiration. I may be out of the trade that day, but I don't want to tighten my position down so much that I have no wiggle room. Steven's asking, do you manage any of your positions with spreads if they do start to move against you? Actually, recently, we have managed a couple of positions by converting them into a spread. What we ended up doing was rolling out the position to buy more time. And then we added a short leg to it. That allowed us to take management action for minimal additional capital, which I think is critical when you're managing an option, and also position ourselves to be able to, and there's no guarantee or certainty this will happen, but be able to fully recover the drawdown that we currently have on the position.
Arizona's asking, he's done research on Microsoft, and at an 80% desired win rate, I get a sweet spot of 1 point. But if I lower the desired win rate to 60%, I get a sweet spot of 4 points and an 85% win rate. So those are two different win rates. Let's just talk about the 4 points, it'll be easier. When you do a 60% desired, that's how many times it's going to hit the sweet spot. And then I see you have an 85% win rate, and that is because the times it didn't hit the sweet spot, really the extra 15% times or 25% of times it didn't hit the sweet spot, it still ended up in a win because it's using the reversal. And at the reversal, it was a profit.
Yeah, so here's an example right here on Amazon. It did not hit the 15-point sweet spot, but it was a winning trade because at the reversal, you're able to close for an overall profit. So that's why you're seeing that, Mark.
You're welcome. So we wanted both of those win rates in there for that exact reason. 80% doesn't make sense on Microsoft if you're only looking for 1 point, but you could still end up with your 80% plus win rate with 4 points. So that's why we wanted both of those the desired percent and the actual win rate in there.
Carol's asking, are you working on a method to post management actions in case we are not in the room when the discussion takes place? We are having some conversations about that, Carol. We realize that the method off of the daily crosses is to just put on a GTC and let it go. But the practical reality is, as Erin said today, she evaluated, you know, we got in a little bit later. it had hit the sweet spot. We have a profit. We probably want to take it off. So we're having some discussions, which we haven't committed to yet, that we may, for the members of the live trading room, we may use the Options Moneymaker app to just send out a very quick note with that action, not a long explanation of the strikes and expirations and all that, but simply, hey, we closed the Google position early for X, so you can then take action if you want to. That's a discussion that we're having. It just adds another dynamic to what we need to manage during the day. So that's where we're leaning right now. Gerald's asking, can you also trade vertical spreads? Listen, these signals are the signal telling you that there is an opportunity to open a new position. Beyond that, it is entirely up to you to decide what strategy you want to trade. You could trade buying a call, buying a put. You could trade a diagonal or calendar spread. You could trade a vertical debit spread. You could trade a credit spread. You can decide to do whatever you want, whatever strategy you are most comfortable with. So this is not defining the strategy. This is simply saying, regardless of what strategy you are choosing to use, the directional bias of the underlying stock or index is indicating this particular direction. So use whatever method you choose that you're most comfortable with. Jack, you want to see the Google tab? There's the Google tab. Looks like, not sure exactly what you're looking for. 80% win rate on Google is about a 10-point sweet spot. That's a strategy all by itself, Mark. Arizona is just saying buy puts and sell covered calls to get a free trade. Yeah, folks, I want to be very clear about this. What we are talking about here, what Craig and Aaron and I are talking about, has nothing to do with strategy. That's a whole different dynamic of learning to be an effective trader, successful trader. Whatever strategy you choose, and if you don't understand options strategies at Options Moneymaker, we do have a program called the Profit Builder Plus program. That's where you're going to learn the different strategies and how to apply them. We teach spreads in that course. So what we're talking about and what we are doing in the live trading room is just simply buying a call or buying a put. And then because of our knowledge of spreads, we are in some cases reconfiguring those positions into a spread when we have to manage them, rolling out, repositioning, maybe converting them to a spread. Or, as I mentioned earlier, if we buy a put and there's an immediate reversal, we may make a decision to add a call. Well, that is a spread all by itself. It's called a straddle or a strangle, depending on how you construct it, and that is a spread all by itself. David's asking if booking continues to move sideways, would you consider adding a call to the put we hold, since booking can have large swings as we get closer to earnings? Let me just go back to booking here, David.
You're already there.
Oh, I am there. That is definitely a consideration. We believe that having a straddle or strangle in play on our positions where we're approaching earnings is a good strategy. Doesn't guarantee we're going to do that on this trade, but it's something that we'll evaluate. We saw that as a very, very strong plus for us on Amazon. We saw that we didn't take this action on Shopify, But we saw that that would have been the right action on Shopify. And, you know, in trading, you learn from the trades you take, and you also learn effectively from the trades you didn't take. So that's something that we'll review for booking. But even if we don't do that, David, and you feel confident in that type of a strategy, certainly don't let us be a hindrance for you doing what you think is the best choice for you. Thank you, Fergal. Appreciate that. Okay. Craig, Aaron, anything you wanted to add before we close out?
I don't think so on my end. Just look forward to connecting with people on the forum. Please register if you haven't already, and love to hear more about all the trades people are taking.
Yeah, Craig, thank you again for not only the profit flow analytics and particularly Cycle Finder Plus, but the forum that you guys are putting together. I really appreciate this collaboration that we have between New Cycle Trading and Options Moneymaker.
Likewise, we're all very happy and really looking forward to lots of exciting stuff this year.
There's just one last question here. Let's see. Stephen is saying, I've noticed that the ask price of an SPX daily option out of sync with the cash underlying. Have you seen this? For example, SPX trading at 33.85 today. Option price has an ask usually in the afternoon. Maybe my broker's platform is at fault. What you're asking about, Stephen, is not something that I notice. This occurs when I have my trade ticket, option ticket open. Option prices and underlying price. Yeah, well, remember, option prices are influenced by a variety of factors, volatility and price movement. And also, if you're looking at the bid-ask, you should not be trading off of the bid or ask on any option. You should always be trading off of the midpoint between the bid and the ask. And some platforms, it's referred to the mark, which I think is, you know, a reference to me, but not right, Aaron? Isn't that what you told me?
So Stephen, if the option price,
You notice how she just
be
ignores me when she just doesn't want to weigh in?
the option price isn't directly, I mean, it is, but it's not directly correlated to what the price SPX is trading at. There's a lot of factors: time to expiration, what the delta, the volume, the volatility, all of that is going to affect the option price.
Implied volatility is really a big thing, especially near earnings. What was it with Tesla recently? There was that day where calls and puts were both going up simultaneously.
Yeah. Yes, it was.
That was so interesting
It
and
was
something I've never
bizarre.
experienced before.
It was bizarre, yes. Okay, we're going to go ahead and close out, folks. Thank you so much for being here. Thanks for being part of our community at Options Moneymaker, and thanks for being part of New Cycle Trading's community too. And Craig, really appreciate you stopping in and spending a little bit of your time with us.
Absolutely.
Thanks, Aaron. Always appreciate you. Well, I actually appreciated you until that last comment.
Until that last part, I'm sure.
That last part where you just ignored me. You blew me off. That's okay. I'll probably forget about it by tomorrow. So
okay.
Thank you, everybody. We're going to close out now.